Welcome back, everyone. We're going to break down Sofi's most recent earnings report. The stock went up early in the morning and then continued to sell off into the afternoon. Sofi beat revenue estimates by 2.9%. It added $2.9 billion in deposits versus its guidance of more than $2 billion. Its 34.8% three-year revenue compound annual growth rate compared to 53.1% quarter over quarter and 74.8% 2 quarters ago. The members, check this out, guys. Record new members additions of 717,000 in Q3, bringing total to nearly 7 million members, up 47% year over year. I mean, if you just take a look at this members in thousands chart, if we look at Q3 2020 and we compare that to Q3 2023, the amount of members is significantly higher. So in Q3, 1.5 million up to nearly 7 million new members. It's just absolutely crazy the growth this company continues to get. I'm so proud of this company. I'm proud to be an investor. I don't care what the stock does in the short term because this kind of execution, it's very rare to see. This quarter was a record for sequential product additions and among its strongest ever for member additions. Both product and member year-over-year growth accelerated for the first time in quite some time. Products per member stayed at 1.5 despite rapid new member growth. That number per member product is not going to go up. We just wanted to stay consistent. If it stays at 1.5 products per member and we continue to add 500,000, 250,000 members quarter after quarter, that's just bringing so many more quarter after quarter. It's really, really impressive. Here we are, guys. Check out the products. Record new product additions of 1 million in Q3, bringing total to 10.4 million, up 45% year over year. Again, if we compare Q3 of 2020 to Q3 2023, that growth is extremely accelerated. And these aren't bullshit projections. These are actual numbers that Sofi is bringing in. Even if you look over the last year and a half, quarter after quarter, we're continuing to see growth after growth, and year after year, it looks like we're stabilizing in that kind of 50 to 40% range year over year, and that's still incredible growth for the products, guys. Another thing I wanted to talk about is margin. Sofi beat EBITDA estimates by 54% in margins. It actually missed negative 8 cents of GAAP earnings per share, EPS estimates by 21 cents. This was solely driven by nearly $250 million in impairment charge. The source of the charge wasn't specified on the call, but it's likely from acquiring Technisys. This is a one-time deal, so the margins will continue to get better after this quarter. Without the non-reoccurring, non-cash impairment charge, Sofi would have beaten EPS estimates by 5 cents. So now that this is in the rear view, we're going to continue to see EPS grow quarter after quarter, and I think we're going to hit profitability next quarter in Q4 like we're projecting. Here's the Galileo accounts, guys. This is kind of peaked, it looks like. There's some serious growth from 2020 to about Q4 2022. And then we have seen a recent resurgence between Q1, Q2, and Q3. The growth is not huge, but it is there. That's another segment of their business that is growing 10% year over year. I mean, it's not blowing it out of the water like products at 40%, but if we can continue to grow in that 10 to 20% range in Galileo accounts, and remember, a lot of these accounts are big accounts, so that is good for another little revenue stream for Sofi. Here's the lending and financial service products. Check this out. Lending products up 24% year over year, and financial service products up 50% year over year to 8.9 million. The financial service products, that growth is extremely accelerated. Look at the growth from Q1 2020 to Q3 2023. It's just seriously crazy, guys. It's legitimately crazy. The last 4 quarters were pretty much over 50% growth, and Q2 was at 47%, but that's close enough. And then the lending products is continuing to grow year over year in that 20 to 25% range since Q1 2022 at 20%, and then 23, 24, 24. So like there's a lot of consistency there. When we are investing in a company, that consistent lending product growth is so important, man. And as we continue to increase deposits and they can lend out more money, it's just the snowball effect is real, guys. And lending products at 24% year over year in this kind of environment, it's extremely, extremely impressive. And I couldn't be happier with this most recent earnings report. Here's the financial services productivity loop, guys. It has reached an inflection point, it says, which creates marketing efficiencies and improves buys. Ratio of financial services to lending products. I mean, check it out, guys. Q3 2021, Q3 2022, and Q3 2023 went from 3.1 times to 4.6 times to 5.6 times. We're continuing to grow, and the funnel is working. It's great. If we look on the left, guys, Q3 2022 total is 7,199, and Q3 2023 10,448,000. So growth from financial services and lending products continues to grow, and Anthony Noto and Sofi continues to execute at a super high level. If you're an investor in Sofi, I know we're not being rewarded with the stock price, but if we continue to execute at these levels, in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. And I think more institutions are going to look at this company and recognize the potential moving forward. Next, we're going to talk about quarterly performance. Record adjusted net revenue of $531 million. That's up 27% year over year, and recorded adjusted EBITDA of $98 million at 18% margin. And we're continuing to see a lot of great execution. Quarterly adjusted net revenue in millions of dollars. We look at Q1 2022 at $322 million, and now we're approaching $531 million. It's incredible. Q3 up 27% year over year. So the net revenue is continuing to grow at that 27% range. It's not as great as it was, but as the company gets bigger, these growth numbers year over year are going to be smaller and smaller. That's just the nature of any business. As you scale up, your margins decrease, but the amount of money on the bottom line continues to grow, right? Quarterly adjusted EBITDA, look at that, guys. $9 million in Q1 2022, and we're approaching $100 million in quarterly adjusted EBITDA. You can't beat that, guys. And that's the most important part. The year-over-year growth for net revenue is great, but we want to see EBITDA margins increase at 18% year-over-year for Q3 2023. That's what we want, guys. That is the money shot right there. Almost $100 million in quarterly adjusted EBITDA. It looks great to me. I'm super excited. For year 2023, non-GAAP guidance, we expect to deliver between 2.045 and 2.06 billion in adjusted net revenue and between 386 and 396 million in adjusted EBITDA at a 48% incremental adjusted EBITDA margin. This guide assumes positive quarterly GAAP net income in Q4 2023. So they are projecting that in Q4, we will become a profitable company. And with that, I think we need 4 or 5 straight quarters of GAAP profitability to be included in the S&P 500. And you know, a lot of these funds get out in front of S&P 500 inclusion. So we should see some appreciation in the stock price in 2024. My price target for 2024 is $13. By the end of 2024, I think we'll be at $13 and holding steadily in the teens, if not, $17, $18. That's my best case scenario in that $17 to $20 range. But I think being conservative, $13 target price for SoFi at 2024 end. All right, thanks so much for tuning in, guys. I did a little podcast for you today. Let me know if you are happy with SoFi earnings. I know I am. Thank you so much for tuning in, and we'll get you guys on the next video. Peace.